Wow, crazy stuff happening in the markets this week that we have to talk about. Like first, I finally got a haircut and now my head looks like an egg. But that's okay, because if you walk me 10,000 steps or smash the like button 10,000 times, which I think is way easier, I'll finally hatch to be a real YouTuber. Okay, in all seriousness, FTX is thinking about buying BlockFi for reportedly $25 million, which is insane because even though that sounds like a lot of money, that represents a value loss of 99% from BlockFi's last private valuation of $4.8 billion. Also, Ethereum got an upgrade this week to Gray Glacier, which is just an update to delay the real update until later. Now, we also have the Bitcoin spot ETF from Grayscale, which was just rejected by the SEC, which is one of the biggest reasons why Bitcoin fell below $20,000 and why it's trading sideways, because the spot ETF was something a lot of people were waiting for, and it looks like it didn't happen, which is also why Grayscale is now suing the SEC. But arguably the craziest thing that happened this week is we had a default of a major crypto company called 3 Arrows Capital. And now they're being accused of running a Madoff-style Ponzi scheme. So we'll talk about that as well. And we also have new information about the recession. So if you're seeing people like Peter Schiff say, "I knew it, we're going into a recession." And this is why. I'm gonna explain exactly why everyone is talking about this so you can join the conversation on Twitter and tell everyone about how you were right, even though in order to be right about a prediction, you have to give a deadline. Otherwise, no matter what you say, eventually you're gonna be right? Also, now that it's been 4 weeks after the second quarter has ended, we finally have new information from the BEA, the Bureau of Economic Analysis, which, if you remember, is that government website that no one ever visits that has a release schedule of all the information about the recession, which, if you remember, is measured by the GDP, the gross domestic product, which is nothing more than a measure of how much stuff a country makes in a given year. The point is, if we get 2 negative GDP readings back to back, it does not matter what number they are, as long as they are negative, that's when we get the official recession. Well, this Wednesday on June 29th at 8:30 a.m., they released the third estimate for the first quarter of 2022, and it turns out it's actually worse than we originally thought. Add to that the crypto default, and that's what's going on. So in today's video, I'll explain exactly what's going on, what happened, and how this will affect us. There's a lot to talk about, so let's just get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the epic season finale of The Economy on Fire, starring President Joe Biden, directed by Papa Pal. I'm just kidding, but it does feel like a sitcom nowadays because we are now 30 days away from the epic season finale, because on July 28th at 8:30 a.m., the Bureau of Economic Analysis will finally release their advanced estimate for the second quarter, and that's when we'll finally know whether we're in a recession or not. But most likely, probably, yes. Now, before we get to the season finale though, everyone is talking about last season, which is the third estimate of the GDP for the first quarter of this year. And again, everyone is talking about it, and here's why. See if you can notice the pattern. On April 28th, we got the advanced estimate for Q1 at negative 1.4%. On May 26th, we got the second estimate for Q1 at negative 1.5%. And now on Wednesday, June 29th, we got the third estimate at negative 1.6%. So every single time they've given us an estimate, the GDP keeps going lower and lower and lower, and that sends a signal to investors that the economy's approval rating is lower than we thought. And that's why we're waiting for the next season. So that's where we are, that's what's going on. Now let's talk about crypto. But first, a quick word from today's sponsor. All right, so here's the truth about the recession and the market falling apart. This is a true story. I was watching a wealthy keynote presentation, and they said something that really affected me, which is when the recession starts and everything starts to fall, be prepared to add a 0 to your net worth. That's when real wealth is created. And I think that's true because while everyone is panicking, you're gonna use that time to buy assets for cheap. And that's why today's sponsor is iTrust Capital. iTrust Capital allows you to buy Bitcoin inside of your retirement accounts and not pay any capital gains taxes. They have over $5 billion in transactions. They've raised over $125 million at a $1.3 billion valuation, and they have over 150,000 accounts. So once you download the platform, you'll be able to buy up to 29 different assets and not pay any capital gains taxes on them inside of your IRA. You can also trade 1,000 times a day. Now, they're not a day trading platform, but day trades inside of your IRA are not considered taxable events. They also allow for conditional transactions to set your market buy buys at a price you're comfortable with. They lowered their minimums to open an account to $1,000. They charge only a 1% fee, but the best part is that if you use my link down below, you'll get a $100 funding bonus to open your account. And you can fund your account in a number of ways, whether you have an old 401k, or if you want to roll over a previous employer-sponsored plan, or if you have a current IRA from an old brokerage. If you already set up an account with iTrust Capital, don't forget to finish setting it up, deposit some money, because remember, real wealth is created during bear markets, so be prepared to add a zero to your net worth. Like Warren Buffett said, be greedy when others are fearful, and use Andrei's link down below for a $100 funding bonus. I made that up. He never said that, but now let's get back to it. All right, so here's what happened with crypto. This is about to get insanely complicated, but I promise if you nerd out with me for the next few minutes, you'll learn at least one or two new things. Special thanks to FS Insight for their awesome research. This story starts with 3AC, or Three Arrows Capital, and this week they were forced to liquidate or sell roughly $700 million worth of assets to pay for their debt, which they couldn't do. That's the easy version. Here's the more nuanced one. Founded in 2012, you can think of 3AC as sort of like a crypto hedge fund that managed money for their investors. And at one point or another, their AUM, or assets under management, totaled roughly $18 billion. It was huge. The way they got this big was partially because their founders had a really good reputation, which allowed them to borrow a ton of money at a small collateralization ratio. This is just a fancy way of saying if I have $1, I'm able to borrow $100 against it. In this example, my collateralization ratio is just 1%. I have $1 and I'm able to borrow 100 times against it. That's a small ratio. And this is true for big banks and big companies because they're seen as less risky than if I were to go and borrow money as Andrei the individual, which means my collateralization ratio has to be higher because I'm seen as more risky. The point is that it led to huge crypto companies like Voyager and BlockFi to trust 3AC with hundreds of millions of dollars that they no longer have, which is also why Sam had to go bankman and freed them up from their debt. And with this borrowed money, here's what they did. They started to buy Grayscale's Bitcoin ETF called the GBTC. At one point, they were the largest shareholder of this ETF, which, by the way, you can sort of think of as like a certificate for gold, but for Bitcoin. It's not a spot ETF of Bitcoin, but for simplicity's sake, it's kind of close. Investors just call it a derivative of a Bitcoin ETF. But the point is that they started to buy a ton of these ETFs in 2020, and they borrowed as much money as possible to do that. Now, they held that ETF then for the lockup period, which is the minimum amount of time you can hold an investment before you can sell it. And as soon as the lockup period ended, they started selling it at a premium to the NAV. Now, I threw a ton of complicated words at you, so let me explain. NAV stands for net asset value. And the way it's calculated is by taking the price and subtracting liabilities and dividing it by the shares outstanding. So an easier way to explain what the heck I'm talking about is looking at this stock right here, VTI. Most of us have this stock in our retirement accounts or in our brokerages, wherever else, right? So this stock, which is an ETF, sometimes people call them baskets. Inside of these baskets are a ton of independent individual stocks that make up this one stock. So the question is, if we were to pluck one of those stocks outside of this basket, how does its price compare if we were to just buy the stock independently outside of the basket, right? Hopefully the two would be the same, but that's not always the case. So in GBTC's case, for example, which is a derivative of Bitcoin, sometimes that ETF can trade at a premium to the NAV, the net asset value, which in this case is Bitcoin, and sometimes it can trade at a discount to the NAV, meaning the ETF is cheaper than the net asset value, which in this case is Bitcoin, right? So if we were investing our money, obviously we want to invest in this ETF when it's trading at a discount to the NAV. So the question is, if 3AC was somehow selling this ETF, how was it able to do it at a premium? Who's buying it? Well, it turns out there is a reason why someone would actually buy it at a premium. And the reason is because it wasn't people buying these ETFs. It was institutions with billions of dollars on their hands. And when you're dealing with that kind of money, you just don't have the time nor the interest to deal with Bitcoin like the peasants do, transferring it from one app to another to a cold storage wallet, handling private keys for thousands of Bitcoins. Ain't nobody got time for that. So you're gladly going to pay a premium to the net asset value to get exposure to this asset class. And as soon as 3AC realized all this, they started to borrow as much money as possible, and they over leveraged in order to sell these ETFs to all these institutions. But then in 2020, Bitcoin started to go up in value like crazy, at which point all these institutions started to become more fearful. So that meant there were less buyers on the market, which meant that ETF then started to trade at a discount to the NAV. And that meant time to sell. But remember how I talked about that lockup period where you can't sell for a certain amount of time? Well, that's exactly what happened. And as Bitcoin started to collapse and the whole crypto space started to crash, they couldn't sell and get out on time, so they got margin called. And all these daisy-chained loans, which depended on each other, started to fall on top of each other like dominoes. It also didn't help that they put a ton of money into Terra Luna to generate that interest to service their debt, because Terra Luna also collapsed. Now, if all of this was insanely complicated, let me explain like I'm 5, because there's an easier way to explain it and how this will actually affect us. Imagine I have this amazing investment idea that I need a ton of money for. So here's what I do. Hey Graham, I need to borrow $1,000. Here's my strategy. And he's like, wow, that's so clever, Andre. Here's $1,000, but you know what? I need you to pay me 10% interest on this money. So I'm like, I got you, bro. But I don't got him because I don't have his money. So I go to my friend Jeremy. Hi, Jeremy. I need to borrow $1,000. Here's my strategy. And he's like, holy smokers, this ain't no jokers. That's amazing. Have my money. So he gives me his $1,000, and with part of his money, I'm going to pay part of the interest from Graham's loan. And on this goes, and I go down the long list of friends that I know and all the companies that I know to borrow as much money as possible until eventually I build $1 billion portfolio. Then I say to myself, this is getting a little risky, so I know what I'm gonna do. I go to the bank and I show the bank my $1 billion portfolio and these amazing returns that I'm getting. And the bank's like, wow, you are so successful. Here's more money. So the bank gives me more money. And with this money, let's say we hypothetically park it into an investment that's very risky, but it's paying 20% interest. Let's call it Terra Luna. So I park all that money from the bank at a 20% annual interest. So with all this extra cash flow that I'm getting, I can now use this money to pay the interest from all the friends whose money that I've borrowed. And on this goes. And believe it or not, as crazy as this strategy sounds, it's actually doable, because anytime you need money, you can just go to the bank and borrow more. You're kind of untouchable until one of the assets that you're buying falls below a certain price threshold, whether it's Bitcoin or Terra Luna, at which point you get margin called and all your friends call you up and say, hey Andre, where's my money? Except I can't pay anyone back their money because it's now worth 50% the value that I actually borrowed at. That is considered a Ponzi scheme. And this is why the crypto space is crashing, and it's also why Voyager sent 3AC an NOD, or a notice of default, for roughly $700 million. And that is why we desperately need protection and clarity from the SEC, and it's weird that they still haven't given us the spot Bitcoin ETF. They've given us a way to bet on the future of Bitcoin's price against Bitcoin's price, but no spot Bitcoin ETF. And I guess if I were to take a guess as far as why they haven't approved it, is because they're afraid of what could happen to retirees or pension funds if they were allowed to buy such a volatile asset. Either way, the sooner they regulate it, the sooner they protect it, the better off Bitcoin will be. And that's what makes me so excited about Bitcoin's future, is if Bitcoin is worth $20,000 from nothing in this wild, wild west of crypto, then where would it be in the future once it is protected? Exciting times ahead, so please stay safe. Don't put all your eggs in one basket. If that basket is promising 30% interest rates, if that means that basket eventually catches fire. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to complete those I Trust Capital accounts so that when you retire, hopefully you'll retire with millions of dollars and not pay any taxes. The links are down below. Love you. Thank you so much for watching this video. I'll see you back here on Monday and Friday, sometimes on Wednesday. I'll see you soon. Bye-bye.